Stock sank on Friday to end the week lower, with Omicron being blamed. Alongside the variant was the Labor Department's jobs report, which did not meet Wall Street's expectations. So the S&P 500 posted a weekly loss of 1.2%, the Nasdaq underperformed with a weekly loss of 2.6%, and treasury yields also dropped since investors were buying safe haven assets. The yield on the 10-year treasury fell below 1.4%, and this all resulted in the worst three-day start to December in about 20 years. The Omicron variant has been reported in 5 U.S. states and has been found in more than 36 countries. Yet, much is still unknown, and that seems to be spooking the markets since we don't know what the world's reaction will be to the variant in terms of a lockdown perspective. However, as we talked recently, we should be expecting volatility anyway, so this should be no surprise. But if one looks back to Delta, there really wasn't a meaningful impact from that variant. So once again, the fear is the unknown. So now let's take a look at the charts to see what may lie ahead. The first chart here is the volatility index, to continue from our discussion on Wednesday, and this is the 6-month daily chart. Looking at stockcharts.com, and you can see in the upper left the symbol is $VIX. Now from Wednesday we had a peak here, and now we have an exceeding move up to this level here, but the close was below. So in my humble opinion, things are weakening, and you can see that here in the lower portion of the chart, the MAC. You can see the histogram here where the levels of the last 2 days are below, meaning that the separation between the fast line here in the black and the slow line here in the red is starting to turn. Up here in the upper portion of the chart is the RSI, and you can see that this peak here is the highest of this past week or so, and the current levels have not been able to reach that height. So again, things do seem to be calming down, although you may not feel it in the markets. But back here to the price chart, you can see that we're still elevated to a 30.67, and that's high enough to give problems to the market. And since this is at this level, we're going to continue to have some volatility, but I think we'll also see that in the charts. So let's go to our charts. And we're now looking at the 6-month daily chart on the spiders, the SPY, and the close on Friday was 453.42. And as we can see here, we're having a little bit of volatility, which again should be expected. But at the same time, you can see some congestion happening in this lower level here. And if you go down here, you see this congestion here, and that indicated the bottom of that move down there, and ultimately we continued to move on up out of that bottom and basing. And I think this is what we're seeing is perhaps the starting of a bottoming and basing. We still have some more volatility to get through, and we did go below that 50 EMA, but I still don't think that's really all that negative. We went below the 50 and the 20 EMA back here, and we did a couple of times at least below the 20 EMA back here and here in June and July, and there in August. But certainly I think this period here, which lasted about 3 weeks to maybe a bit longer, is a pattern to take a look at and perhaps use as a path going forward. So definitely some congestion here, perhaps the starting of a bottoming and a basing. Here in the volume, you can see that things did increase. They've leveled off more or less. So I think the early signs perhaps of some calming down. The MAC, though, you can see that the acceleration of the fast line has come down below that zero line, but we're right there, so I don't think that is really all that significantly negative either. There's still a pretty decent separation between the slow line and the fast line here. So once again, that does mean volatility, perhaps some sideways trading. Moving on down here into the histogram, just as we saw in the VIX, we see here that the histogram in the last couple of days actually pulled up, which means that the separation between the fast line and the slow line in the MAC is not growing. So if it's not growing, at least it's becoming a little bit more stable, though we will have some volatility in the markets. Moving on down here into the price rate of change, you can see the attempt at a bottom here, the move on up, and this fishhook here with a move down means that things actually are a little bit better. There's a little bit of improvement, but only a couple of days does not make a market. You can see the same thing here, where we did come on up here. We came here sideways or so in a couple of days, but that wasn't the bottom of the move. The bottom of the move was down here. So we may still have some more volatility, so be prepared into next week for that. Relative strength, it's about a moderate 37.68, so that's relatively weak. It's under the 50 or midline, but once again, this sawtoothing is starting to attempt a bottoming and basing. Hasn't taken hold yet, but I think it will. It's going to take some time into next week, perhaps the week after. And you can see here stochastics also an attempt at a bottoming and a basing, but these patterns can take some time. This again was about 3 to 4 weeks or so, and we're just into this maybe 1 week or so. Give it some time. Same thing here with the Williams. Again, the maximum negativity right now is here in early December, but we need to see where this continues on into next week. My bet, I think the probabilities are that we certainly are in the beginning stages of a nice bottoming and basing, but only time will tell. Moving on here into the price chart, once again, one last look, and you can see that the bottoming and basing pretty much mirrors what's going on with the oscillators. So I would say that still stay on the sidelines, be patient. If you have some money to deploy, make sure that you have conducted your due diligence with the fundamentals. And so for today, that's ChewDog Charts. Thank you.